in the last few days, a lot of people have been talking about a banking crisis. To be fair, I don't think we're in a crisis. I think we've got some concerns, absolutely warranted. But to say it's a crisis, this is all about sentiment, and we may be accidentally going into a bit of a negative feedback loop there. Yeah, it's a fragile system. At the same time, let's stand back and look at what's going on. AT1 bonds are playing the role they should play. There will be legal squabbles about them and how they rank versus equity. That's clearly an issue. But we're in a much better position today than we were 15 years ago on either side of the Atlantic. So yes, I think we can expect choppy markets, but the fragility of financial systems, I think we're not at that point yet. So probably draw a distinction between the two of those.
But we're not even done on the rate hiking cycle, are we? And this is the question, really, it seems, that we need to try and clear up. What was the connection between the emerging banking problems and the global central banks tightening monetary conditions? Because we've just had a really hot inflation print here in the UK, which would suggest that there's still plenty more reason for markets to be prepared for further rate hikes.
Yeah, no, the UK number is pretty standout, but it's not a unique UK problem. The US, Chairman Powell is going to face the exact same problem today. The last core inflation print in the US was 0.5% month on month. The long-term average is 0.2. So, and the PCE deflator is also a bit stronger than expected. I think it's key to remember here, the Fed has a dual mandate, and it needs to distinguish between what it can and cannot control in the very near term, I think. So inflation, we expect another 25 basis points today, but it'll need to be balanced with some kind of light at the end of the tunnel that the rate hiking cycle will come to an end. They've got a dot plot coming, a fresh economic forecast that can perhaps help with that. But I think the favourable thing here is between the Treasury and the Fed, they've put in place lots of different measures to contain the bits that monetary policy probably doesn't want to directly impact. So I think some issues around regional banks are being well contained and will continue to be well contained while the Fed can continue on its journey. Today will probably be a balancing act between avoiding maybe sounding a little bit too dovish like Powell perhaps accidentally did back in January, and then trying to tackle some of this surgent data that we've seen in the UK and elsewhere. So it's going to be a fine line. But keep in mind as well, the Bank of England, talking about the UK, the Bank of England navigated this back in September, October, where they went through rate hikes at a time when the gilt market was having some significant concerns and wobbles. The ECB navigated this last week. So it's not beyond the wit of central bankers to get through this. I think it'll be a deft line. It'll be a cautious, fine balanced message, but they can get through it.
Des, I just want to take issue with your first comment there that this is not a banking crisis because, if we just think about the events today, we've got a 100 billion Swiss liquidity line in place. We lost a storied institution in Switzerland. The closure of Credit Suisse now is taken over by UBS effectively. We lost that banking name. 2 banks in the United States closed. Daily swap lines are enacted by central banks. Monetary policy potentially steered off course from higher rates that we're setting up for today. This is a banking crisis, isn't it?
Well, I'd say there are significant legitimate concerns in the system, and those concerns are partly related to an ongoing rate hiking cycle. But to be fair, the dot plots weren't published last week. The dot plots have been out for some time and they've been pointing to higher rates. So participants could have been aware of this. But I think there's a danger here around sentiment. And, the difference between a bank going under and a bank staying stable can be just a couple of comments or a little bit of poor sentiment changing quickly. And that's the bit that we need to be careful on. So my point really is focused on in the Eurozone debt crisis and before the financial crisis, the capital position of European and US banks was very different to what it is today. So yes, there are some fragilities in the system, but we should also remind ourselves that the system is better regulated, better capitalized, and a lot more prudent today than it was 15 years ago or during the Eurozone debt crisis. And we just need to kind of keep that in mind that, of course, there are concerns, but we've made a lot of progress here as well.